Hello traders, warm welcome. This is Mike Hamilton for Trade the Easy Way. If you didn't make any money today, then watch closely. I'll just go through intraday price action of a couple of charts and just show you what to watch out for. This is the Dow on the daily chart. You can see, we are struggling. We are on a down channel. And I think moving averages are crossing over through this 200 EMA. So this chart is really struggling. However, I don't think we are going to get some big flush down. What I think is going to happen is, I think particularly through the summer months, the quite quiet summer months, I think we will just see these gentle waves. Might see a push into this resistance area, which will create another series of gentle waves. Okay, I don't think I could be wrong. We could all be wrong, but this sort of level of resistance, if we keep bumping into this, then we are going to be coming down. The sort of thing I'm looking at is this here as well. This was another little down channel. We did actually just push higher, crept above the resistance, and then started another move to the downside. Alright, so that's the sort of thing I'm expecting. If you throw the fibs on this last biggest move here, you can see we've already tested the 50% and we're just trying to hang on here. Nothing more than hang on. So any push into 700 could be the next flight down. Right, moving on. One of the best trending charts out there at the moment on the mainstreams of Forex or indices charts has been the Euro Yen. You can see this is divergent with the DAX. So as the Euro Yen has been popping up and the Euro US has been popping up, so the DAX has been popping down. Yeah, the more expensive the Euro is, the less profitable German industry is. So, direct correlation there. Just watch out for that. We are coming into a lot of resistance. Look at this resistance up here. So basically just in a big apex, but we are going to be hitting these stars, the drop down areas, when we get to about 139, and we're very close to that now. Okay, so if we see a repeat pattern here, we pushed up and up, and we pulled back to a trend line that was here, and then we got the final leg up. So that's what I'm expecting here. We've had 1, 2, so this is a little third wave, so we need an A, at least an A, B and a C wave to come down potentially before we can push. If we are going to push up, that's the sort of price action we need. So we may need a bit of a breathing space here, but all the time we get higher closes as we have now. Just keep buying pullbacks. So I promised you I'd talk to you about how to catch at least some of this move, if not all of it. This is the 15-minute chart. Let's just take this off. Actually, I normally use a naked 15-minute chart, so bear with me one moment. Okay, this is my normal 15-minute chart, just a 20 EMA on it and a stochastic momentum index at the bottom. So what I would do is I would throw a fib on the last move that we've seen here. So this is, so we're looking to pick up the action for the current day based on action that we've seen so far, and this would have been the price up to the previous day. So the line for the previous day is here, about here. So what I've got is I've got fibs on this low here and the previous day's high, and at the lows we picked up this fib level. So if you've got a nice trending chart and you want to find out how you can get a slice of the action, wait until all the news is out of the way, fib it, and see if it's picking up on a level that you can trade. That's also a way, if you are working full-time, part-time, and it can't be your screens that long, this is a perfect way of potentially making money by putting an order in the book for this 807. Put your stop under 782, so it's really not that big a stop. And set your target for 127 extension. If you don't get it, and you come back to your screens, I don't know, 4, 5, 6 hours later, whatever, just put a stop to break even, or put a stop under the support, so you've captured at least some of that move, and then leave your target up there, and then see if it reaches that the next day. Okay, if you're a day trader, you could just either scale out here or go in all out, and then throw the fibs on the next day and then see where that may go. Alright, so I hope that helps. But this Euro Yen is the best chart out there, so I'm not going to spend a lot of time looking through a lot of other charts because I've already done that, and there's not a lot to show you this time of the week. Yeah, we've got not a lot of data left either, I think. We've got CAD manufacturing, some inflation data in the US, consumer sentiment hour and a half after the session. Really not a lot going on. Alright, we can see why we've got a lot of action in the euro this week, because we've got euro core price inflation, Eurogroup meetings, and flash GDP. Not quite sure what flash GDP is, but you can look it up here if you want to know that. So that's enough. Let's do a quick look at the commodities before I go. And gold is already struggling at that point that I've been referring to in all these videos. So I'll take all that off now. I suspect we could get range bound. So we've touched the 50 EMA at the high there and seen a little bit of selling already. What do I think is going to happen? I think we may just test this 1130. But based on the fact it's a very bearish chart, we could already be on the way down. But we didn't close underneath this bar here, so I have to say this is potentially a consolidation pattern, not a sell. And if we close above 1330, 1335, that's yeah, real potential here. We could have a cup and handle. There's a lot, the gold's a little bit tricky to talk about here. There's the cup. Could dip down and get a handle and start to retest some of these higher levels of resistance before we start to revert back to the downtrend. Oil is just in deep doo-doo. And any push up, it just gets sold into. Pushes up, gets sold into. Pushes up, gets sold into. I think ultimately we could be looking at, this is a continuous contract by the way, not September as I keep saying. I think we could be looking at 38, who knows, maybe even as low as 32. But this is, mind you, we still haven't broken the March lows. So until the change trends, and until the trend changes even, keep shorting any highs. This RSI can stay under here for as long as it likes. No such thing as an oversold or overbought. All right, stocks. So I was going to finish, but let's quickly look at a couple of stocks. Macy's is paying dividends. I've been talking about this for at least a couple of weeks now. But this is, this big move up here looked really, really juicy. But it's what they do with this move. It's what they do with that range that really tells the story. So this is a bracket trade. And after a push like that, the market tends to want to revert back to the mean, and the mean for this one, the average on this one, was the low end of that bar. So what they've done is they so a couple of days after that big move, a lot of profit taking took place, and we put in a reversal bar, and we slowly edged. Took about a week to really put in a proper sell signal, and then the following week we dived under 71. Spent another week consolidating, selling at the highs, and now we're getting the impulse wave and the capitulation. So there might be a lot of novices who bought up here, started to feel some pain down here, maybe even doubled up on this support level here, and now they're really feeling the pain and potentially have given up the ghost by the time we start seeing those kinds of lows. But that to me was a good, not a huge sell signal, but certainly a chart that was at least wanting to come back and test the breakout area and at least sink back into some of this, retrace some of that. So it's an opportunity to get short, manage the trade, and then if it holds support, then you can just take whatever profits you've got, which will still be a decent slice of that. And if it capitulates and breaks down underneath, then your quid's in. All right, just a good example of the sort of way you can not just take a trade, but actually manage it, actually manage your risk, and increase your account, increase your probability, but more importantly, make greater profits just by simply managing the trade. Amazon, this could be another Macy in the making, on the basis that we have a huge bar. Naturally enough, at the 161 extension, we saw some profit taking. Some buyers stepped in, some novices stepped in, trying to yank it up, and it wouldn't work. At the moment, I say it wouldn't work. It's weighted, it's consolidated to come into contact with the 20 EMA again. So this could, if this is a bullish consolidation, then that dip onto the 20 could be the signal. This is getting ready to push back up again. It's a couple of ways you could trade it. You could short the high and manage to stop, and just keep your stop above 55 100, 55.10, or wait for a push up into 55.60. If you're bearish, wait for a push up into 55.60 and see if you can get that to come down. Well, I think that's finely tuned. Could go either way. The fact it's touched the 20 and held is bullish, but I think at some stage you're going to want to come lower if that's going to get some volume in it. Would I buy up there? And that's the litmus test, isn't it? Would I buy up there? No. I'd go and find a better chart and let that one play itself out and then come back later. This one, this is GFRD in the UK, and this could be the way Amazon goes. And because we had these nice waves up, we see some profit taking, but it comes back to this 50 EMA, bounces up, bounces off it, bounces off it. Now it's come in contact, after a consolidation period, it's touched the 20 EMA and closed higher. Would I short that? No, not unless it closes right underneath that again. Then I would try and get in high as high as possible and then ride that one out. This is we're seeing a lot of this same pattern, aren't we? Big push to the upside and a very limp reaction afterwards. This is NVAX. Lovely bullish consolidation. Push up, comes back to the 20, pushes up, can't find enough buyers, comes back to the 100, goes up, back to the 100, pushes up, I mean, if you've got something that made that kind of move and it hasn't exploded like a big bubble that's wanting to burst, just buy the dips. If the resistance gets sold into, just wait another buy another pullback, and see how far you can go, and then see if it can break up. And what I do with MVAX, I would at least want to see a push back into this 12.15 at least if I'm going to buy that.
Hi, I'm Barry Scott. It takes something super powerful to shift lime deposits.
Okay, I'll leave it there and see you next update.